Ladies and gentlemen, good day and welcome to FDC Limited Q3 FY22 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity to ask questions after the brief highlights on the financials from the management. At that time, if you would like to ask a question, you may enter star and 1. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Varsha Rani Katre, Company Secretary and Compliance Officer of FDC Limited. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone, and welcome to all of you. Glad to connect with you all. I hope all are safe and healthy. I would like to introduce the FDC team present in this earnings call. We have with us Mr. Nandan Chandavarkar, Joint Managing Director, Mr. Ameya Chandavarkar, CEO, International Business and Executive Director, Mr. Sanjay Jain, Chief Financial Officer, Mr. Mayank Tikka, AVP Business Development and Commercial Excellence. We'll begin the earnings call with the highlights on Q3 and 9 months ended December 21, financial performance of the company from Mr. Sanjay Jain, followed by an interactive Q&A session. There might be certain forward-looking statements. These statements are subject to certain risks and uncertainties since they are based on certain assumptions and expectations of future events. I would request all the speaker participants to restrict their queries to 5 minutes only and avoid repetitive queries to save up on the time. With this, I shall now hand over to Mr. Sanjay Jain, our Chief Financial Officer. Sanjay, over to you.
Thank you, Varsha. Good afternoon, all. This is Sanjay Jain. I will just take you through the Q3 financial results. Along with the quarterly results, the YTD results also of December 21 period. So, to begin on the overall revenue perspective, so this quarter we have achieved a 3% growth on a year-on-year basis. In terms of breakup of top line, domestic formulation sales recorded a growth of 16%. Like the earlier 2 quarters, strong growth in the domestic formulation business. The export numbers for the quarter is at 41 crore against last year 45 crore. However, there is a reduction in our US revenue to 9.59 crore against last year 34.6 crore. Coming to the YTD numbers, we have registered a growth of 17%. In terms of breakup, domestic formulation sales has recorded a growth of 36%, and the numbers are 1,022 crore against last year 753 crore. On export side, the numbers are 113 crore versus last year 146 crore. The revenue from US is at 39.6 crore versus last year 102 crore. So the growth in the domestic formulation business as continuously with the last 3 quarter performance. Some of the secondary data which I hope you must have read in our press release, on a year-on-year basis we have registered a 22% growth against the IPM growth of 21%. So this growth mainly driven by our big brands like Zifi, Electral and Zatri. Also, the company has moved 1 rank above to 22nd from the same period last year, 23rd. Also, in the 9 months period, Zifi has moved to 35th largest brand in IPM from 49th same period last year. Also, Electral has moved up to 54th in IPM against last year 64th in the same period. Moving to the margin part, this quarter margins, the EBITDA margin at the operating level is at 43.45 crore against last year 68. The reason for the degrowth in the EBITDA margin is primarily because of some of the costs which were not there in the last year same period on account of the COVID restriction. The expenses pertaining to the marketing, the logistic cost, and some other admin related costs were not there. So hence this quarter all these expenditure are to the pre-COVID levels. So hence there is some pressure on the margin for the December 21 quarter. On the YTD number, the 9-month basis, EBITDA margin on operating level at 229 crore against last year 280 crore. The reason being the same, the various costs associated with the operations are or were not there in the last year same period, and in this current year the costs are almost at the pre-COVID levels. Also, I am happy to again share with you the company has announced the buyback to the extent of 170 crore, including of tax, which at the rate of 475 rupees per share. Moving to next, some of the few key development about the company for the current quarter. The company has received ANDA approval from US FDA for the product ofloxacin otic solution 0.3%. Also, company has successfully completed the PICS audit at our Goa 3 plant. Thank you very much. Now I will hand it over to Varsha to take the proceedings further.
Thank you, Sanjay. Now I request moderator to initiate with a Q&A session.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1. The first question is from the line of Ritesh Gandhi from Discovery Capital. Please go ahead.
Hi sir, just had a couple of questions. Sir, so you indicated that effectively because of the comeback of certain amount of expenses to the normalized levels, our Q3 margins are effectively have come off. So is this what we should take as the new and normalized EBITDA margins? Because even historically pre-COVID, we were doing higher than 14%. So just wanted to understand the reason we are saying that the reason EBITDA is lower is because of the return of certain amount of cost.
So thank you for the question. The lower margin in the current quarter is, as I explained, not only on account of the.
With some echo.
Am I audible?
Yeah, the echo has gone now.
Yeah.
Can you hear, Ritesh, can you hear us?
We can hear you.
Go ahead.
Yeah, so the margin pressure in the current quarter is, as I explained, not only on account of the normalization of all the operating expenditure, but the top line pressure also. So as you see, the overall top line for the current quarter has not given that much growth. So when we compare the overall percentage margin to the top line, it's automatically reduced to the percentage which was not there in the earlier period. So it's the mixed combination of the expense and the revenue part. And also as I explained, the revenue was under pressure mainly because of our international business and more specific to the US revenue, which is almost down by 72% on a year-on-year basis, and on a YTD basis down by about 61%. So these are the few reasons why EBITDA margin is under pressure.
Extremely strong brand, it's extremely steady. And I'm
Gandhi,
assuming
lost you for a second. Request you to please rephrase the question.
Yeah, sure. So what I was asking is, I'm assuming our India business, obviously, given how strong our brands are, is throwing out a reasonable amount of free cash flow, and we're deploying some amount of that free cash flow into our, America generics business, which is a highly commoditized business, which effectively we are a very small player in, and obviously, we are seeing even the larger people kind of struggling, So just wanted to understand, where do you expect to be deploying the free cash flows that we generate over the next few years from our India business into? And the other question is that in the event that the US generic business is not an attractive business, wouldn't it then just be helpful to say that let us increase our payout ratio or let's get the buybacks to 80% of the net profit, as an example? Just if we don't have, attractive areas in which we can redeploy the cash flow.
So thank you again for your question. So as I mentioned about the buyback, so if I put it in terms of the number, the buyback which has been announced this year is almost at 60+% of our net profit.
Yeah.
Yeah. So it's not that we are retaining the entire amount. The significant portion of our PAT we are distributing either by way of buyback or dividend. So this time we have again given the buyback. Coming on the expansion plan, we have taken a few capex program during the current financial year, which are expected to materialize in over a period of next 2 or 3 years. So you must have a view on our exchange, an intimation with respect to our installation of a new line on ALP4, where we are going to spend of almost around 70 to 80 crore on it's a dedicated line for ophthalmic purpose. So we have both objective in mind for the shareholders on a distribution of the free cash flow as well as the selective capex plan for our future business growth.
Got it. Okay.
So, Ritesh, also to add, to your point that where will you reinvest funds generated, right? So we are in a relatively a niche space in the US, which is ophthalmics. And so you cannot say that it's highly commoditized like simple oral solid dosage forms. So therefore, we have to be careful when we say, okay, we're going to only deploy or reinvest in a specific market or in a specific category of products. We will be investing wherever we see higher returns, wherever we feel confident that we can deliver.
Good. And how much is our hurdle rate for reinvestment? How do we look at it in terms of equity IRRs, payback, steady state ROCs? How should we be looking at that? How do you look at that rather?
So again, this is on a case-to-case basis. On various parameters, we look at each and every case. So there is no fixed percentage or IRR that we look at. On an overall basis, if it is profitable to us, which makes sense for the business, we opt for it.
Yeah, the future cash flows, Ritesh, need to be attractive. So you're in the investment business, so you know that we need to consider certain risk, certain discount rate, and look at the present value of future cash flows.
Yeah. No. So I'm asking in terms of your own internal thresholds, be it an equity IRR, which would be effectively equivalent of a little TCF, or payback period or steady ROC, however you look at it. What would be your internal metrics to say, okay, it is so much, therefore I am okay going ahead with it, or it's under the threshold, therefore I will skip it?
So we'll usually use a discounted cash flow method. Yeah.
And how much is the discount rate you use?
So depends project to project.
Okay. All right. Let me get back in queue and ask incremental question. Thank you.
Sure. Thank you.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and 1. Our next question is from the line of Ajay Sharma from Maybank. Please go ahead.
Yeah, hi. Sorry, I joined the call late, so apologies if you already talked about it. But I wanted to know, in US, we have this profit sharing model, and I'm wondering what has happened really that both the turnover and the profits seem to have collapsed in this year. So why so much kind of volatility in ophthalmic business, which is supposed to be more stable?
So is that Ajay?
Yeah.
Yeah, so Ajay, in our last call, this is Amey, in our last call we explained that in the previous year, financial year 21, we had a great opportunity with one of the products, and where 2 competitors got out of the market, and therefore our market share in that category went up significantly. We were also, our partner was agile enough to raise price and take advantage of the opportunity. Now, what has happened this year is those competitors have come back in and things have normalized in that market. So that's one major reason. The US market, as you know, is it's extremely dynamic. There are competitive pressures. When competitive intensity goes up, pricing changes, and that impacts your top line, it impacts your margins. So, yeah.
So, if you were to...
Can't hear you.
Sorry, how much was the profit sharing number for the 9 months?
So, we're not authorized to share those numbers according to our IR policy.
Okay, because if I'm not mistaken, last year full year number was about 129 crores. So I'm just wondering, basically, that was a pretty chunky number. And so just want to understand, basically, all the margin pressure we've seen in the first 9 months, is it coming entirely from that number going down significantly?
So Ajay, where did you get this number from? How are you arriving at that number?
Well, it's disclosed in your annual report, right, under profit sharing.
Okay, so I'm just making sure that we've talked about it earlier and it's in the public domain so that I can talk about it. So you're absolutely right. That's the number that has gone down.
Okay. And do you think now it's kind of stabilized at this low level and can rebound, or how do you say it?
So that's a great question. We believe that at least for that product, things have stabilized. And we've got another product that has got approved. So we are hoping that things only look better going forward.
Okay. And then on the domestic business, I wanted to understand basically the growth. Are you able to talk about like which are the main products like Refi, Electrol, Energy, Drink? You give any numbers on which are the products which I would like to discuss?
So, Mr. Mayank Tikka will take the question. Can you repeat the question, Ajay?
No, basically, I just want to get a sense of the brand-wise or maybe category-wise the domestic market. Which are the main brands?
Yeah. This is Mayank answering the question. Yes, Zifi, Electral, Enerzal, Zatrin, what was mentioned by Sanjay, that have really contributed. But just to give you a gist, this year probably all our therapeutic basket has fired pretty well in double-digit growth, except for a couple of them. So all our top 10 brands have given a substantial growth. But if you talk of the overall quantum, definitely the top 5 brands, which are Zifi, Electral, Zatrin, and Enerzal, they have really contributed well, right from April, first quarter, second quarter, and the third quarter.
Okay. And just a question on the US side, I mean, where is any new product going to materialize? Basically, are we talking about?
Sorry, Mr. Sharma, your voice is breaking. Not able to hear you clearly.
Pipeline, lots of ANDAs in the pipeline.
Sorry, just wanted to know when are the new launches expected in the US market?
So you might have seen we informed the exchanges that we got approval for the ear drop, ofloxacin ear drop. So our customer has started placing orders. So, hello?
Yeah.
Yeah, so that will be launched anytime within the next 3 months.
Okay. I'll come back in the queue. Thank you.
Thank you.
Thank you. Our next question is on the line of Kunal Randeria from Edelweiss. Also, participants, please enter *1 to ask a question.
Yeah, hi. I hope I'm audible. So firstly, sir, do you foresee some weakness in your domestic market in FY23, considering that some of your brands like Enerzal or Zatrin or even perhaps Zifi would have benefited from COVID?
Yeah, so again, it is very difficult to predict, but we are very optimistic that overall, if you look at the antibiotic market, the oral rehydration salt, this is very buoyant. Yes, we got some advantage because of COVID, because overall the patient outcome was pretty good at the doctor level. But if you have studied our category of products, our products are not directly catering to any of the COVID-related issues. So we are very optimistic, but yes, you cannot define because this year has opened up a lot of surprises, challenges, but we are expecting the industry to be growing somewhere around 9 to 10%, and if that happens, probably we are very bullish about the next financial year.
Sure, sir. And sir, maybe if it's slightly longer term kind of a question, so in the next 3 to 4 years, you still believe that, your Electral or Enerzal will still be a growth driver? The reason I ask is if I look at AVAX data, I see that, for example, in Electral, you have around 60% kind of market share. In Enerzal, it's around 95%. So just wondering, where do you see the next leg of growth coming from?
Yeah, so maybe you asked a very pertinent question. We normally debate this out internally also. So on one hand, we are the market leaders in this category and we are carving out or enhancing maybe the market overall. So these are very generic products where we are trying to expand our use case scenarios at the doctor fraternity, various indication profiling and other things. So we are very bullish that these things will not slow down for us. But having said this, since we have done well in the last couple of years, and especially this financial year, we are trying to optimize other therapeutic baskets also where we are present right now. So you will see definitely a movement apart from Zifi, Electral, Enerzal. We are focusing on the next league of brands also, and we are doing our level best to push this in the next financial year.
So also I'd like to add, see, market share, when you talk about 60% in the ORS and then Enerzal 95%, it all depends on how you're defining the market. As soon as you start talking about in the rehydration space, what's the market share, then you'll see that, okay, there's tremendous potential in a country like India. So please also review how you're defining the market when you talk about 95% market share for Enerzal. That seems a little too high.
Fair point, sir. And so just continuing with your comment also, so any particular brand you would like to call out where you think maybe, besides these top 3-4 brands, which you expect to become like a blockbuster brand in the next maybe 3 to 4 years?
So how would you define blockbuster brand?
Let's say more than 100 crores, right? I mean, your Zephyr and Electral are 200 crore kind of brands, right? So maybe somewhere around 100 crores or something like that.
Yeah. So this year, Enerzal will probably breach 100 crores. So on the good, we pass 100 crores. So and there is tremendous potential for these brands to become much larger as we keep adding SKUs.
Just to add, whatever brands that you named, Electral, Enerzal, that's their size in our existing value chain, so to say, in the mainstream business. But as we expand, we will probably go to and will be exploring other channels, and that is going to provide a lot more growth, I think, for those brands.
Sure.
Enerzal variants are there, too many We're talking just only channels, exploring different channels.
Does that answer your question?
Yeah, it does. I'm sure you. I mean, the reason for asking is, you are highly levered towards 2 or 3 brands. So, just wanted to get some sense on how you see probably the composition changing in the next maybe 3 to 4 years. So, but yeah, I mean, it did answer to a certain extent. And just one last question, if I may. So, I mean, any sort of new launches? How many new launches would you have made in the last couple of years? And what would have been the contribution to growth?
Yeah, so as of now, we have not entered much with the new products. It is more of a line extension what we've done in the last couple of years, just because there were COVID around, and last year you had the lockdown, and there was so much of uncertainty which was there. So all our launches either have been line extension in the last 24 months. A couple of them have been COVID related, where we tried to milk the situation, like we entered into the vitamin C and zinc market and etc. So yes, moving forward, yes, we are looking for a couple of big launches, which I would not like to disclose as of now, but first quarter, definitely when we meet next, possibly we will be coming out with some blockbuster launches in various categories.
Got it, sir. Thank you very much for answering my questions, and all the best.
Thank you.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and 1. Our next question is from the line of Cinderella Karwala from Centrum Broking. Please go ahead.
Thanks for taking my question. Sorry, sir, my questions may be repetitive because I missed a bit of call. There was some login issue. So coming to this quarter, I just want to understand how do we define the domestic sales during the quarter? Do you think there is some one-off, or you will call it seasonality? Because looking at our cost base, which Sanjay sir highlighted, that is a kind of normalized cost base. But then our sales at this range of domestic revenue, should we look at what should be a normalized range? Or is there anything in it which you can explain for us to understand it in a better way?
So Cinderella, what I explained ki basically the costs which were not there in the last year, those have came back to the normal in this current quarter. And some of the costs are on the higher side also, like the marketing cost, the freight related cost on the export side, where there was a container shortages across the globe. So these are some of the costs which are on the higher side. So that's why the reason for the pressure on the margin. And if you ask me any specific, any one-off kind of, there is no as such major one-off in the entire quarter.
So I'm trying to understand if we compare the Q2 domestic sales, domestic revenue versus Q3. So if you can just help us understand the revenue gap which is generated in this quarter and what has led to that, if there is some explanation which you can help us understand.
So here's Mayank. I'd like to pitch in over here. Maybe the cost would have, Sanjay would answer that, the cost would have remained similar. But if you look at our overall sales, that has slightly gone down if you are comparing with Q2. Now this is because of the industry also slowed down. If I can give you some numbers, that on a MAD basis, the growth of the IPM is 18%, but if you look at the IPM growth for the third quarter alone is 10.4%. So there was a definite slowdown in the third quarter, which was experienced by us also. So this is very specific to the third quarter comparative to the second quarter.
Okay, now let me just reframe it. If I look at our FY20 year base of, our domestic sales, and then I look at FY21, 22, so, we saw some growth over FY20 in 21, but 22 again, 21 was a disrupted year given that there was COVID, right? And then we have a different base. So what should be a normalized run rate that we should look at from our domestic sales perspective? If you can help us some directionally, because you understand that there are challenges. There was anti-infective market slowdown. There is some recovery that we are seeing. So on a normalized base, because there is a difference between the run rate that we were doing pre-COVID and post-COVID. So what should be a general run rate that we should look at in mind, and how should you look at your domestic growth going ahead? Any broader range would be helpful for us to understand on an annual basis, even if you think quarterly it is difficult to give some direction.
So Cinderella, you're aware that we can't really give you numbers when it comes to direction or growth rates, and we would not like to give guidance. But let's just say that we are confident, we are optimistic about our domestic business, and there are no major concerns.
Okay, that is helpful. If I come back to our major brand growth, say Electral, Ziffy, Energal, if I look at the MAT level growth of IPM, they are looking fairly strong at December MAT level. Should we consider these run rates going ahead, or do you see any risk to them? And what kind of contributions in new products that you are envisaging or pushing in the markets or expecting to drive growth would be contributing, if you can help us with that?
Yeah, so again, in the last answer I said, probably you missed it. Yes, we would be launching new brands, but I would not like to share those details as of now. But we are planning to enter into newer category of products, which will definitely drive growth. But to answer your previous part, yes, the contribution of Ziffy, Electral, Energal has been significant. But as we said, that these are markets which are expanding. So we don't see a challenge. If the industry continues to grow, there would not be any challenge, because in the last 2 years, we have made ourselves or these brands much more emphatic in their operating space. So we are very bullish about it, that we would be able to continue this progress.
I think thanks for that. One more last question from my end, and that is on how much is our NLEM contribution as of date?
It's around 44% of our overall revenue.
So on that 44% of domestic revenue or overall revenue?
Yeah, it's 44% of our domestic revenue.
Yeah, domestic revenue. So considering that the WPI link inflation, we should be able to take that in April month?
Yes, yes.
Okay. Thanks for the clarification. I have more questions. I'll join back in the queue.
Okay.
Thank you.
Thank you. Our next question is from the line of Sharat Sharma as an individual investor. Please go ahead.
Yes, sir. Is it safe to assume Q4 would be slightly above par than what we did in Q3? And two, also can we assume that the promoters would participate wholly in this buyback?
Sharat, sorry, we can't hear you. Can you speak little loudly?
Sure. Can you hear me now, sir?
Yeah.
Sure. So can we assume, I know this has been asked but not answered as well, but can we assume Q4 to be better than the current Q3 numbers? And two, can we also assume that the promoters will participate to the maximum share on the buybacks?
So honestly, we can't give you any guidance on the Q4. And on the second question about the buyback, so since being it's a tender offer, the promoters will tender their shares also as per their eligibility criteria.
Perfect, sir. And just a request, maybe great if you could do these conference calls more often. Great legacy brand, and all the best.
Yeah, thank you very much.
Thank you. Anyone who has a question at this time, they may please press star and 1. Our next question is from the line of Nanvardhan Bed from Laurel Capital. Please go ahead.
Good afternoon, sir. Thank you for hosting this call. Just wanted to understand the market size of the latest ANDA approval that we've got in US. What is the market size of that particular product?
Yeah. It's about $25 million.
Okay. And what is the pipeline on the ANDA for 2022 calendar year? What can we expect going ahead?
So are you talking about the next financial year or?
No, I'm talking about,
this calendar year.
Yeah, calendar year,
Okay, got it. So as we said, even in our last call, our plan is to file about 2 to 3 ANDAs every year.
And any expected approvals in the near term? Since I'm sure there must be some filings that are awaiting some clearances, etc.
Yeah, there are some filings which are at the goal date, but we can't really predict when it will come through.
And tentative market sizes of those filings, which are expected, maybe, hopefully this year that might come?
So too early to say, right?
Okay.
The market keeps evolving.
Okay. Right, sir. Thank you.
Thank you.
Thank you. Our next question is from the line of Ahmed Madha from Unify Capital. Please go ahead.
Thank you for the opportunity, sir. My question is, on the current existing exports block, what is the utilization level?
Export block. So we don't have a dedicated capacity for exports, Ahmed. So we are using a facility that also serves the domestic market. And so if you're talking specifically about ophthalmic manufacturing, then that serves our global requirement, whether it's India or the US. And we are setting up an additional line, ophthalmic line there, which will be able to again serve global requirements. It will comply with all the most stringent markets, including, of course, the US. What prompted us to make that investment was that we saw a growing opportunity in the US market.
Got it. So when does the new capacity get commercialized?
It's still about 2 years away.
Still 2 years away?
Yes.
Yeah, because I think in the press release which was issued a year back, December 20, it was mentioned 20 months from December 20. So, yeah, okay, I got it.
Yeah, there are certain processes that have to be complied with for us to start commercial manufacturing, and that's why I'm giving you this timeline.
Okay, I got it. And on the WPI inflation part, because we have a large NLEM portfolio, we have been impacted badly because of the current inflationary environment. So, do we intend to take the entire maybe double-digit price hike if it gets effective from April?
Yes. So that's what we answered in the last question. We will take the WPI price increase wherever possible. And yes, you are right. This time it could be around a double digit.
Okay, fine. And I think there is a lot of discussion on the OpEx part, whether the OpEx as a percentage of revenue has gone up much. And I get that last Q3 FY21 was the not normal base. But if I take, say, a Q3 FY20 number, say 2 years back, and at that time I think we did about 320 crore revenue, and our OpEx was about 80 crores. That was 24% of revenue. Now, as of this quarter, the revenue has grown from 320 to 340, but the OpEx part has grown from 75 to 95. That is like increase in 4% of sales. So, what line items have impacted this, or is this just normal inflationary impact of fixed cost?
So of course, one of the reasons, as you explained, is inflationary also. But as I explained earlier, there are certain line items in terms of marketing cost and logistic cost. These are also gone up, and because the marketing cost was not there in the last year same period. Because when you compare the number which you gave 80 crore and 100 crore, if you compare our OPEX number on Q2, the 100 is almost at 100 in Q2 also. So
I'm asking about FY20 number, so that doesn't that is normalized number, right? Q3 FY20.
Q3.
I'm not comparing with Q3 FY21. I'm comparing with Q3 FY20.
Oh, okay, so you're talking pre-COVID.
Yes.
Okay.
So pre-COVID means you are talking about December 19?
December.
Definitely. Yes, 19. December 19.
Yeah. December 19. Yes.
Yeah. So December 19, of course, the overall inflationary cost has gone up as compared to December 19 because those costs were 2 years back, and the cost incurred in the current financial year are with respect to the AOP plan for the current financial year. So normally the overall OPEX cost will go up as compared to the cost which was there in the 2 years back.
Okay, fine. So say going forward, if there is pickup in the revenue from the current base, there will be impact of operating leverage on margin. Is it a right understanding?
Yeah, but not in the same line. There will be some plus and minus in a particular quarters, but when you compare on an overall yearly basis, the cost increase will not be in line with the increase in the sales.
Okay, fine. Thank you.
Thank you. Our next question is from Saket Kapoor from Kapoor and Company.
Yeah, namaskar, sir. Hello.
Yes. Yeah, go ahead.
Yes. Yeah. Thank you for this opportunity, sir. Firstly, sir, it is indeed grateful of you to now on a regular basis. If concalls are being held, it would throw more light on and give a chance to investors to participate in the growth journey. So just to understand the company in a gist and maybe a repetitive. So what are the current growth triggers for FDC going forward, and the reasons, sir, for which the margins have corrected over a period of time? If we take the September quarter PBT numbers of 91 crore, even if we remove the increase in the other income item, the profitability has fallen Q on Q, and also on a year-on-year basis. So if you could dwell on the factors of which are the one-off expense items, or is it the margin trajectory that will be there for the next foreseeable future?
Yeah. So you are right. The other income in the current quarter is on the lower side, considering the fact that both in the debt and equity market, the reversal of trend was there in the current quarter. Whereas in the debt, the yields have gone up and the equity market has saw some kind of a correction there. On the expense part, we just discussed the trend in the overall cost that will be there going forward. Because the cost, if you compare in the last year same quarter, is not truly comparable because of the COVID restriction, those costs were not there. So these are the reasons why basically the pressure on the margin for the current quarter.
But sir, for us as visibility and predictability of earnings which investors look forward, what should be the earning profile for the organization going forward? Only the thought on that would suffice. Are the current quarter numbers are the ones that are a normal quarter for us, or is it the other way out? And also on the utilization levels for the various facilities which we are running, what is our current utilization levels?
So obviously the current quarter is kind of a one-off kind of a quarter, and it will not be a trend for the future. And if you have seen in the past quarters, our margin more or less remained in the range of 22 to 25% at the operating level, barring the current quarter. So truly we cannot compare the current quarter with the previous year's quarter. It's a one-off quarter where the overall margin and the revenue from our export business was under pressure. On the capacity side, the overall basis, assuming certain facts, we are utilizing our capacity to the extent of 65 to 70%.
Okay, and what is the reason, sir? In historical way, are these the levels which are maintained, or we can scale it up higher? What are the reasons why the plants are operating at 65 to 70%?
I think one of the biggest reasons is it's a multi-product plant. So there is a lot of time which is lost in changeovers and so on. That is the reason.
Okay. And for last year, sir, last financial year, what were the utilization levels, the average utilization levels for the facility?
So last financial year was the COVID affected year. So I would say about 10 to 12% drop was there in the utilization. But those has come back to now normal percentage of 65 to 70%.
So historically also, sir, we will be expecting this level only, or are we looking to ramp up to get the teething problems behind, if I may use the term?
So, I mean, at what kind of level do you think we'd be able to take it up to? Because being a multi-product plant, being multi-product, it is difficult to probably get past maybe 75% utilization or so. Because batch size optimization, there are many factors which prevent us from 100% utilization. If it was a single product plant, it probably would have been possible.
Okay. And on product launches, sir, and which are the key markets where or future product launches we are looking into, and the growth potential therein?
There would be future launches in the foods, in the specialized foods area, and the food products, also in our existing mainstream pharma space.
And on the raw material front, sir, what constitute the key raw material, and what are the vagaries we have to face because of these COVID factors in the raw material, or in what ways are we looking to contain or maintain our margins even if there are fluctuations or non-availability of the raw material? What steps are there in the process?
So as far as the raw materials are concerned, the prices across the board are more or less stabilized, barring few of the raw material which are Chinese dependent raw material. And wherever we see any threat of price increase, we stock up the inventory to the extent required for the next couple of cycles.
And the
there is some side conversation going on.
So what is the key raw material basket, sir, if you could? Yeah.
So key raw materials are like cefixime, cephalosporin products, azithromycin, dextrose. These are few key raw material for us.
And they are all imported, or are we sourcing it domestically?
We're sourcing domestically, but I think some of the key starting materials, even for those manufacturers, are imported.
Okay.
So indirectly it affects the cost of raw material.
Correct, sir. Sir, to have greater visibility and now maintaining the COVID protocols, are factory plant visits and all being allowed for investors and institutional guys? Are we conducting?
This whole thing has opened up less than 2 weeks ago.
Okay, sir. Okay, sir.
Okay, so it's difficult to say. Even in the office, we are still maintaining with just about coming to 100% population. So if you are asking me, can you go visit the plant? I don't think I have an answer yet. Let's wait and watch. Let's see what is the outcome of the government's opening up. Do we go back into another wave? What happens? I can't say. Not predictable at all.
Correct, sir. Okay, sir. Other than this medium, sir, of Concall, in what other way can investors communicate for one-on-one calls are also allowed? I'm new to the organization.
We are not encouraging one-on-one calls, but please feel free to send an email, and if it's within reasonable means, then we'll try to respond to you. Otherwise, we have regular con calls at the end of every quarter, and I'm sure that's enough opportunity to answer any of your questions.
Thank you. Our next question is from the line of Neelam Punjabi from Perpetuity Ventures. Please go ahead.
Thanks for the opportunity. My first question is on exports formulation business. So is it fair to assume that the current quarterly run rate of 37 crores for the export formulation is a base now on which we can grow going forward, or are we anticipating further price erosions?
So, as we said earlier, we have some significant variability because of profit share. And so, if you are asking this question to put it into your model to project, this quarter, I would say, was surprisingly relatively low for us. Okay, so that's all I can say. And going forward, of course, we will strive, we'll do our best to do better, and we are confident that numbers look better.
Got it. And so if you can just provide a longer term outlook for your exports business, how do you see it growing going forward, let's say 3-4 years? Can we see it double from the current base? Given you are even putting up a dedicated ophthalmic line for this business.
So, Neelam, that's the goal. The goal is that the base of export business today, the sales relative to domestic is small. And you're right that we are also investing in additional ophthalmic capacity that will, as I said, serve global requirements. To a great extent, it will serve the export market also. So, yes, the growth rate on export should be fairly significant. It should be at least at par with domestic growth rate, if not higher.
Got it. So, sir, can you just highlight what's your target in terms of ANDA filings on an annual basis?
So it's about 2 to 3 ANDAs every year.
Okay. Shifting focus to the domestic formulations, if I look at your 10-year history, we've grown at mid-single digits, and it's heartening to see that in the last 2 years we've started outperforming the pharma market, barring COVID. Going forward, are we confident to continue to grow faster than the market?
Yeah. So as you rightly said, and probably we said in the last call also. Yes, 19-20 was a turnaround year for us where we started outperforming the market. Internally, we are very confident because we have done the basic changes in our overall strategic inclinations, and they are yielding good results. And our top brands are firing. Maybe if I talk of top 5 brands, all are in good shape, as you might have seen in the data. We are very confident that we will be outperforming the market. But again, the levels, as I said in my earlier answer, it is very difficult to predict because of the COVID. Every time it comes as a challenge. You might have seen normally the third quarter slowing down, but again, December came out as a surprise. So industry levels are very unpredictable, but we would definitely try and outperform the market as we have been doing significantly in this year.
Thanks for answering that question, sir. If you can just highlight what are the strategic changes that you did to start outperforming the market?
So again, these are internal things. I would not be able to share much, but what I can say that we went back to our grassroots or maybe our strongholds and we optimized them to get the desired results. There are a lot of refabrications between the marketing teams which have been done, the refocusing on our parent historical brands and reinventing the markets for them. So that has been the key in the last 2 years.
Okay, that's helpful. Lastly, just wanted to know what is your current medical representative count and any plans to add more MRs going forward?
Yeah, so we are approximately around 4,000 now. We have already expanded. We have taken one maybe expansion this year. So yes, couple of expansions have been done within the therapeutic divisions just to grab the opportunities which are prevailing post-COVID. And also we have come up with one more division. Again, we have not launched new brands for that division, but we have refabricated, as I said, and refocused on our therapeutic baskets with one more addition of division.
Great, that's helpful. Just one last question. What would be the net cash on our books as on December?
As on 31st December, it will be close to 900 crore.
Great. That's it from my end. Thank you.
Thank you.
Thank you. A reminder to our participants, please press star and one if you wish to ask a question. Our next question is on the line of Lokesh Nagpal as an individual investor. Please go ahead. Lokesh, your line is unmuted. Request you to please unmute your line and proceed.
Hi, this is Lokesh. Thank you for this opportunity. Can you hear me, please?
Yeah, we can hear you now.
Yeah, so I have two questions as a small shareholder. The first question is with respect to the quantum of buyback. We all have empirical data in front of us with respect to how much of promoters buyback in the last 2-3 year buybacks that have taken place. Is there a better way of rewarding the small shareholders? Because the quantum of buyback as per current regulations is highly skewed, not in favor of the smaller shareholders. And we continuously do these buybacks every 15 months, very, very small buybacks. So is there some thought from the leadership on this? And my second question is specifically with respect to the other markets other than domestic and US, both regulated and excess markets where FDC's team is trying to do some brand building and get an entry into those markets. So can I have responses to these questions?
So let me answer the first part of your question. As far as the buyback is concerned, I would not say it's a small portion of the allocation to the shareholders. It's almost 60% of our yearly PAT revenue. And for the small shareholders, as per the SEBI guidelines, the reserved amount for the buyback for small shareholders is to the extent of 15%, which is more than the percentage of small shareholders in the company. So in a way, the small shareholders are getting a better pie of the buyback as compared to the other shareholders. And with respect to the quantum of buyback, it's a total 170 crore, including the buyback tax which the company has to pay. And the price will be 475.
So just to understand, when you say it's not in favor of small shareholders,
what are the other better ways you believe funds can be returned, or small shareholders in general can be rewarded?
There's only two ways: dividend and buyback.
Would be in terms of many companies who undertake buyback in frequency as you do, the operational performance over a period of time catches up, right? And here for FTC, we continue to see that the price languishes. We have not even reached the buyback price of the last buyback which happened last year, right? It was 400 rupees. So I am surprised that when we have cash of 900 crores, we do a 170, and out of that 15% is for the last ratio was about 1.1 is 3.29, 3.3. We are one out of every. So less than 20% of our, or almost 30% of our shares get accepted, and when the price comes back to haunt us and see the past three buybacks, and you'll perhaps get the point in terms of what I'm trying to say. So when do we see the operational catch-up, which is a good idea, which is of course that will always be the case if it happens. So that's my limited point. Of course, dividend and buyback is the only thing. I was looking from a quantum of buyback. So when you said ratios are pretty much in front of you, 3.3 was the last time that the small shareholders rewarded. But the way we run the stock market, many new shareholders come into picture when the buybacks is announced. The shareholders tend to suffer, the smaller ones, especially who've been with the company for a long period of time.
Well, we weren't able to hear you clearly. Can you repeat that last point, please? Can you please slow down a little? It'll help if you talk a little more slowly and maybe closer to the mic.
Okay, I'll do that, sir. Sorry about that. So what I was trying to say was, if you look at the buyback prices of the last 2 or 3 buybacks, we have never been able to catch those catch those share market price once the buyback is complete. Perhaps because of operational reasons. So the best way is when companies do to keep these buybacks, they are able to it is accretive to the EPS, and they are able to improve our performance, and slowly and steadily it catches. But I have not seen that as a small shareholder with FTC. The other point, of course, is even though the way the buybacks is currently run in SEBI, many new shareholders come in, and hence the smaller shareholders who have been with the company for a very long period of time tend to suffer. So the best way to reward the smaller shareholders is making sure that the price reaches the buyback price. So here we see that the last buyback price also has not been received, and we keep a huge gap between the current market price and the buyback price, and suddenly, as a small shareholder, I would like you to improve your operational performance rather than giving these hefty buybacks, which don't seem to be rewarding the smaller shareholders.
So we appreciate your point. See, performance is the number one goal, and if that results in so operating performance is the number one goal, and if that of course results in a higher share price, everyone benefits, not only you as a small shareholder. So of course that is our number one priority. That's our main goal. Now, what we have done with the buyback, we have done our best to reward all shareholders, and it's a little unfortunate if you see it as not sufficient, but of course you're entitled to your opinion. So we've done our best, and of course the focus will always be to grow the company and to keep performing better.
My second question is, a company of ours, FTC's size and stature, and looking at the questions from the other participants, don't you think it would be a good idea to have a full-fledged corporate communications and investor relations cell, which can come in the way of answering our queries rather than writing mails every time and then expecting a response? Do we have? Can you throw some light on the investor relations department that the organization has today?
So you are happy to send any communication to us, and naturally we will respond to that, any question, anytime.
So it's a work in progress. See, as we grow, we will definitely add capabilities to engage more with investors and to serve investors. Right now,
you have all the senior people from the company, most of them sitting here engaging with you. And I think that's a good start for us, considering that we used to not do calls because we were focused on what you mentioned earlier is operations and building the business. We felt that that's the most important thing, and then of course now we realize the need to also listen to shareholders, engage with them, and so this is what we are doing, and it's a journey. So we will build capability.
Thank you. Our next question is on the line of Mohammed Patel from Care Portfolio Managers Private Limited. Please go ahead.
Yeah, hi. My question is regarding US business. So can you just break up it between value and volume? 9 months.
Break up? Can you repeat that?
Break it up into volume and value growth, degrowth.
Volume and value growth?
For 9 months, yes.
So,
for the US business,
we can share you the overall US number. You want on a quarter basis or on a YTD basis?
YTD basis.
So YTD basis, the overall revenue from US is 54 crores.
My question is, what is the volume growth or degrowth number?
So as of now, we will not be able to give you the overall value and volume breakup, but the overall revenue is 54 crore. We will share you separately if you can able to send us an email to that effect.
Okay, sure. My second question is that you had a press release on Feb 4 regarding the facility at Goa. So what actually, this will contribute to the business going forward, if you can throw some light?
You're talking about the PICS approval?
Yes.
Yes. So that basically opens up several markets because more and more countries are signing up for the PICS approval, and in a way it basically allows us to then export to more than 15, maybe more than 20 different countries. So currently it's a good approval to have. We still need to look at how we can monetize and how we can extract value out of it.
Okay, sir. Thank you. That's it from me.
After approval, there is a process of product registration that itself takes quite some time.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Ms. Varsha Rani Khatri, Company Secretary, for closing comments. Thank you, and over to you, ma'am.
Thank you all for joining this earnings call of FDC, and the speakers as well for expressing their views. In case if you have any concerns, please reach out to us on investors@fdcindia.com. Thank you all again. Moderator, you can just conclude the call.
Thank you very much. Ladies and gentlemen, on behalf of FDC Limited, that concludes today's earnings call. Thank you all for joining us, and you may now disconnect your lines.